Hello everyone. On today's edition of The Final Bar, we'll talk about market recovery. That's all it took, one day, and all of a sudden things feel pretty good all of a sudden all over again. We'll talk about the rally in the markets today. We'll talk into shifting stock segments, all the different themes we can pick apart based on the action we're seeing today. We're also going to have a segment called Crypto Corner. This is Crypto Week on StockCharts TV. Talk about what it means for you as a long-term investor and answer how you responded to one of our viewer polls. Ladies and gentlemen, this is The Final Bar. Hello everyone, welcome to today's edition of The Final Bar, every weekday 4 o'clock here on StockCharts TV. I'm your host, Dave Keller, Chief Market Strategist at StockCharts.com here in Redmond, Washington. Thanks for joining me today and every day. Please keep your questions and your feedback coming. We had a great segment yesterday with the mailbag answering some of your questions, so keep them coming to us at thefinalbar@StockCharts.com. Email is the best way to get a hold of us. You can also, during the show at any time, put comments in the chat room. Our producers are watching that. We'll make sure we get to your questions as soon as we can, all right? Quite a recovery day of sorts today, right? A rumor, a tweet sort of sells things off. Yesterday, the same thing sort of comes back and we see a nice rally in stock. So, you know, we talked yesterday about all these long-term themes, how they fit into the short-term narrative and just how to reconcile these two. What does it mean in a period of increased volatility? So it's all about trend and it's all about level. And what we're going to do, talking about things like technology, talking about particular areas like railroads, other parts of transports and industrials, you know, what are the key levels to pay attention to and where are the trends? That's the most important thing to follow. So today, a really cool show. It's Crypto Week, so we're going to be talking a little bit about cryptocurrencies today and each of the shows today, this week. Today in particular, we're going to have a segment called Crypto Corner where we're going to talk about how cryptocurrencies, how digital assets make sense for long-term investors and how you should think of them. We'll also answer or sort of respond to one of the polls we put for all of you for viewing, and thanks again for responding. Let's get to the market recap today. So as we mentioned, you know, nice recovery, nice sort of bounce higher. And again, yesterday, and this is looking at the last 2 days of the S&P 500, you know, yesterday we sold off. We had that gap down because of the expectation that U.S.-China trade agreement pushed way into next year. But all of a sudden, over the course of the day, things get more constructive. And we've talked a lot about that last 30 to 60 minutes of trading. And again, institutions, that's where they tend to move a lot of their their bets and make a lot of rotation. So if you see a nice rally going into the close, usually fairly encouraging for the next session and next couple sessions because you see sort of better buying going into the close. We had the nice rally this morning right at the beginning of the day. Here's a little more detail on today's price action here relative to the last 4 days. So here's that jump, the gap higher and the move higher on the spiders in the first 30 minutes. That's usually more retail driven, a lot of reaction to overnight news. So that's sort of the agreement maybe less time than we thought. But then look at what happened since then. It really was sort of a blah market, sort of sideways. And what's most concerning to me is the last hour was lower, right? So we finished sort of toward the lows of the bulk of the trading session. So, and again, that is one data point, but you can see a number of these periods where we've had sell-offs into the close, and it usually just tells you a little bit of the institutional sentiment, so some profit taking, some selling off going into the close there. What does that mean to the long-term trend? And again, the key with this show is to look at the current bar, the final bar, but also relate it to the long-term trends. What we talked about yesterday was the fact that we're testing support levels on the S&P 500, also on the XLK, other broad measures of equity strength. Here, the low of around 3090, which was the low from mid-November. We came right back down, gap down below that level, traded lower, but closed back up toward the highs of the day. Now we sort of the reaction today going a little bit higher as well. So that really has been established, I would argue, as a pretty significant support level. The fact that we closed right around 3090, it tells me that 3090 level is really meaningful. People are keying in on that. And so that's the level I'm going to be watching. Today, sort of a reaction to what we saw yesterday. So now, obviously, one of two things can happen. Scenario number one, We see further accumulation. We lean more on the seasonal tendencies, which means December tends to be pretty strong going into year end, into January. January tends to be a pretty good month. A lot of window dressing, a lot of selling things that did not work and going into things that did, which means things like Microsoft and technology continue to rally. That's option one. Option two is this is a dead cat bounce. We have the sell-off, the reaction, and then we have another leg lower heading down to the 50-day moving average. And I think that 3090 level on the S&P is going to be the one to pay attention to. I want to look at the Mindful Investor Live chart list. We referred to this list. This is one of the chart lists that I keep updated regularly and I refer to all the time. If you don't have access to this or you haven't seen it, just shoot me an email at thefinalbar@stockcharts.com. I can send you a link to this and you can review the charts as I update them, and a lot of things we'll talk about on air we'll put in here. But what I wanted to highlight was the stocks versus bonds ratio. So this is the spiders versus the TLT. So if this ratio is going higher, I've indicated some of the green arrows here, that means stocks outperforming bonds. If it returns lower and the line goes down, that means bonds outperforming stocks, or sort of a risk on versus risk off. I haven't put on a new arrow yet because it's a bit of a pullback, but overall the trend has still been kind of positive, right? But it's interesting to see as we retest the 200-day moving average on this ratio, if we continue further down, if we continue to see a rotation away from risk assets more to a risk-off sort of bonds, gold types of things, or if this is the next leg higher and we go up. But this is one of the charts I'd certainly encourage you to pay attention to if you have not done so yet. And this is just a ratio of the spiders versus the TLT. Wanted to jump over here to the member dashboard page, just looking at sectors. Then we'll look very quickly at some industry themes. Energy up big today relative to other sectors. So while the S&P was up 0.6%, energy up over double that, 1.5%. Financials, then healthcare, both up about 1%. So some nice moves from financials and healthcare. That long-term chart of the XLF, potentially one of the best things to follow just to see if things are overall going to hold up okay. That nice 2-year base breakout that we've seen. On the bottom side, we have materials, industrials, and I think most concerning, technology, the third one from the bottom. Yesterday, if I remember right, a couple of our 3-and-3 charts, technology, Microsoft, those kind of things. Tech being at the bottom end of the rotation, especially on an up day, is a little bit of a concern, right? If you see that trend continue over time, I think that's a problem. The fact that industrials are so low, if we look down here at the industry groups, what I'd be concerned if we see some of those members of transports down here at the very bottom. We see heavy construction, that's what's dragging things down pretty well today. I don't see any of the other transports like airlines and shipping and so forth, but those would be concerning items if you see it at the bottom. You can see all the energy stocks that were up big today though. Equipment and services up 3.5%. E&P stocks up 2%. So some really interesting divergences, or rather dispersion, meaning some different differentiation between some of those different industry groups. So if you've not taken a look at that, I'd encourage you to dive into some of the industry themes. As we talk about shifting stocks a little later today, we're gonna get into those themes a little bit further potentially. Our next segment is called Crypto Corner. This is really a unique segment. We wanted to talk about cryptocurrencies and thinking about all the different ways to reflect, review, and consume cryptocurrencies, digital assets, as an individual investor, as a long-term investor. So we actually polled a number of you recently, just thinking about what you would consider, whether or not you'd consider cryptocurrencies as a basket a viable investment or not. 30%, almost a third of you said not viable, not a viable investment. 28% of you said a gamble only if you have money to lose, which I would argue is pretty similar to the first bucket. The third one, it's an interesting concept. It's a fad, viable with a place in the portfolio. So if you group these up together, over half of you said, boy, it's not a super viable option, or it's something that I would use with play money that I'm not that concerned about, is kind of how I would summarize that. So, and I think that's totally fair. If you any conversations I've had with individual investors, it's very much an unknown. So what we're hoping to do with cryptocurrency, Crypto Week today, or this week on StockCharts TV, is to help you understand how you could think about them as a long-term investor. And again, my goal is not to change your minds and have you think about it as a legitimate investment, but it's to help you think about it. It's to help you frame out the question, because I find a lot of people are just unfamiliar with it. Couple things I will share with you. Number one, Dan Russo does a really good job of addressing not just cryptocurrencies, but the broader theme of blockchain. So cryptocurrencies like Bitcoin are driven off of a technology called blockchain, which is a different way of organizing, transmitting transactions and data. And that is a technology that will become more and more prevalent, no doubt, in most strategists' minds, thinking about forward-looking technology. So that is one theme that I know Dan has mentioned a number of times really well. If you haven't seen his show, it's one of our pre-market shows. Check that out before the open on StockCharts TV every weekday. I sat down with Tom Lee from Fundstrat a couple weeks ago at the Las Vegas Traders Expo, and we're going to share some of his interview later this week as part of Crypto Week. But he and I talked a little bit about how it should relate to an asset allocation decision. So if you think about it, most people look at asset allocation in terms of stocks, bonds, commodities, gold. Here we're getting into a little bit of a gray area for some people. Real estate, alternative assets, potentially. Cash might be one of those allocations. His argument, Tom's argument, which we'll hear from him again in detail in the coming days, but his argument is it has a differentiated return stream, meaning while stocks tend to do a certain thing, while gold tends to do a certain thing, the dollar and so forth, cryptocurrencies, especially Bitcoin, are different. And different is good because it cushions you from shocks from one of those other assets. If you can diversify into different technical patterns, into different trends, then potentially you're going to weather things a little better, is sort of the general way of thinking. Let's look at the charts and actually look at what cryptos are doing. And again, we're going to look at some long-term charts. I found a lot of people that look at cryptocurrencies tend to be a little too short-term, and that's totally fair because the volatility is extreme, and there's no doubting it. So, today is actually one of the most muted crypto days I've ever seen, where cryptocurrency, Bitcoin, for example, down only 0.8%, 0.9%. These at times will be up or down by 5-10%, and that's sort of normal. That's the volatility that comes with these. You'll notice while most of the markets we're looking at are closed, especially with ETFs, Bitcoins actually trade 24 hours a day. They also trade over the weekend, so you will always see updated ticks from those. So on your member dashboard page, go to Market Overview, click on Crypto. This will list out the most liquid cryptocurrencies out there in Bitcoin, Ethereum, Bitcoin Cash, Litecoin. These are certainly the most popular ones that you've probably heard of. But you will see them update all the time. And again, nothing's broken there. They actually trade way more actively and way more often across the day. It's more like an electronic future, like an E-mini future or something like that if you've dabbled in that side of the financial market. So you can go to the crypto tab. You can see any of them in particular, but then you can start to chart them over longer term. And so if you look, each one of these has a designation. So $ BTC USD is the way you can get to the chart of Bitcoin. I'm going to bring that up over here very quickly. And now we're looking at a little bit of a long-term chart of Bitcoin in particular. And again, out of all of the cryptocurrencies, this is certainly the most widely referred to and one of the most widely consumed. Earlier this week, at the beginning of Crypto Week, I showed a chart of all the different major assets, looking at the dollar, gold, equities, bonds, and so forth. And then we added cryptocurrencies, and you saw how it muted the returns of all those other assets because it's been so volatile. So just over the last year, right, if I'm starting from 1 year ago, December of 2018, you can see that it was sort of in line with the S&P for the most part, even though this is 25% up and down because the scale is so exaggerated because there's been such a move. In the second quarter of this year, Bitcoin took off, broke above both the moving averages, 50 and 200 day, in an established uptrend, higher highs and higher lows at its peak. It was up over 200% from the beginning of December of 2019, up over 200%. That's a huge move, obviously, right? Since then, it's settled down a little bit, and even though this relative strength line seems pretty straightforward, and if you're looking at a stock, probably pretty straightforward. Remember, these are huge percent swings. So this is a 100% loss in the value of Bitcoin over just this 1 month period as you rotated from peak to valley. So again, the moves are exaggerated. What's key are the trends, right? And so when we're thinking about Bitcoin, I think you want to apply in some ways some of the same thinking that you would apply hopefully based on what we've talked about with stocks, which is number one, measure the trend. Is this thing in an uptrend or downtrend? And when I'm looking at a chart of Bitcoin, I would say there was a period in the first half of the year where it was clearly in an uptrend of higher highs and higher lows. We had this swing low in July. We never made a higher high. That was the first time it really failed to make a higher high going back here to the end of last year. Since then, we then had another lower high. So at this point, you have to be a little skeptical that we're going to have any further upside. And then the breakdown of support that we saw finally here in September is what really rotated things lower in terms of Bitcoin. Since then, we've had some fits and starts, and again, this is a huge move from 7,400 up to over 10,000. That is a monster move, and since then it's sort of settled down. The RSI, I think, out of all the things we've looked at, is a really important thing to pay attention to, and I'll tell you why. We've talked about how RSI is a measure of momentum. We've talked about at times on the show when a market is in a bull phase, the entire range bumps up a little bit. So the RSI tends to get extremely overbought above 80 on rallies, and it never really gets below 40. That's sort of normal. When the RSI finally starts to break below 40, like we saw at the end of September, that tells you things have changed. That tells you there's been a rotation from more of a bullish phase to maybe a consolidation phase and now more of a bearish phase. Now we can see that the RSI consistently becomes oversold on sell-offs, never really gets to the overbought region, and here it just got to around 60, 65, but never got back above there, sort of failed right after a break above the 200-day. At this point, lower highs, lower lows, below 2 downward sloping moving averages. So at this point, I think you want to monitor it. I think you want to be paying attention to this and look for some sort of sign of accumulation, and a turn up in the relative strength there at the bottom would be what I would be looking for in particular. That is our discussion of cryptos in this Crypto Corner segment. We're going to take a quick commercial break. We're going to be back talking about shifting stocks, all the themes we can pick out on this rally day in equities. We'll be back in 1 minute. Hey guys, welcome back to the show, The Final Bar. Thanks so much for joining us every weekday here on StockCharts TV after the close. If you've not taken advantage of the holiday special, it's certainly the time to think about your subscription to StockCharts.com. See if it's a good time to extend that or re-up it. You can go to StockCharts.com/special to find out more information about it. But a perfect time to do it if you've not thought about it in a little while. In our next segment, we're going to be talking about shifting stocks. And the idea with the shifting stock segment is to really review what themes we can tease out by looking at individual equities. And again, there are a lot of different ways to do that. Sometimes we'll lean more on screening tools. Sometimes we'll lean more on industry themes and so forth. Other times we'll start at the top level and sort of get down to them, maybe start with the scooter reports to look at what's moving. But the idea is just to think about all the different ways we can generate ideas in the equity space and what stocks are moving that we want to be paying attention to, really. I want to start looking at the sector level. And again, our 3 and 3 yesterday, we talked about technology. And again, I'm often asking our guests what their one chart would be, especially in our longer interviews. And if you ask me today what my one chart would be, of course, I want to answer with about 10 charts because I love the different visualizations we can maybe consider. But one might be the XLK because we've had this sell-off. The XLK gapped lower. This is a 2-year chart, so it's a little shrunken down. Let's make it a 1-year chart just for viewability here. There we go. So here's the sell-off that we had, the gap yesterday, but the accumulation into the close, and that pattern tends to tell you that we're going to have a short-term bounce, which we did. As you look, though, the XLK actually closed below the open, a little different than some of the other sectors, and the relative strength continuing to turn over. So it's still, it's maybe a 1-month low. It's not quite, for me, a 3-month low. A 13-week low is what I usually look for as a signal that things are really happening. This is just the beginning of that. But I think it's important with something like technology stocks. This has been the leadership. I tweeted out one of the relative rotation graphs earlier today looking at the weekly RRG and how technology has been in a position of strength. but on the daily RRG, it's actually rotating lower because of this relative sell-off here. I think if that continues, if you continue to see this relative strength line go down on the XLK, especially going into year end when you'd expect this to be going higher, I think then you have to think that maybe the seasonal tendencies are not going to play out as well as or as clearly as they have in other years. You may want to look at the individual positions within technology and really think about what they're telling you. So the XLK, in terms of what we do next, if we continue below the low from last week, if we continue to go lower on the relative strength, get back down to this level from where we were at a month or two ago, I think that'll be really telling. Within industries, we had a number of movements. I sort of mentioned this a little earlier, looking at some of the groups. Railroads are a really interesting group. We're going to look at a chart of the Dow group here. This is the railroads industry, so this includes a lot of the names that you're probably familiar with, KSU and others. But rails in general are one of the components of the transports, and we talked about Dow theory. We talked about how there's this divergence, or at the very least a non-confirmation, with the Dow Industrials going higher, driven by things like tech and financials really, and then the transports rotating lower. And you can see the lower peak that we've had in railroads. So at times, rails have all of a sudden started to look kind of compelling, and there are some charts in the group that actually look pretty good, but as a group, they really have not surpassed the high from May or from July. So while a lot of things were at new highs, something like Microsoft and a nice consistent uptrend, something like rails have actually put in now a lower high, have now made a lower low, going below the low from mid-November, now testing these moving averages. So why rails, I think, are a really interesting group to pay attention to is this is sort of the decision point, right? Is this the pullback, the pause that refreshes, the pullback to the 50 and 200 day, perfect time for a support level before we ride the next leg higher, retest these highs? Or do we fail at the 50-day? Do we break down through maybe 2,300, which would confirm a lower low? And that, I would argue, means real skepticism for rails, skepticism for transports, skepticism for Dow theory, which would start at some point to look a little more negative. Noteworthy that as rails pulled back to their 50 and 200-day, the RSI hit right at 40. And as we've talked about, in a bull market phase, that's about where things should bottom out. So I think it's a really interesting point. Do we bounce further from here? Do we turn lower? And which way we break, I think, should tell you the momentum to lean on going forward a little bit. I wanted to do something just a little different for this segment than what we've done before. A lot of times we spend time with the scooter rankings, and again, I can't stress enough, if you do not spend time with this part of StockCharts, you're missing some really fascinating insights, looking for stocks that are rotating. These are the ones that are making big moves higher or lower. But what I want to do is lean a little bit on our scanning engine. So if I look at stocks in the S&P 500 making 13-week highs, now again, this should line up pretty well with what I'm seeing on the scooter rankings, to be honest, because stocks making new highs in general are going to be rated pretty higher, pretty strong according to the scooter rankings, and stocks making new 13-week lows probably at the weaker end, but sometimes it'll just tease out some other names that you might not be familiar with. So I like to run this scan just looking for it's a very simplistic scan, new 65-day high. The group is the S&P 500. I always sort it by sector because I want to look by sector, just starting with communication services, going down from there. So the first look is what stocks do we see on this list, and at this point, noticeably, communication services completely non-existent. So none of those names hitting a 13-week high right now, right? So that on its own is an interesting signal telling you that those have not sort of eclipsed their previous highs. A number of stocks in consumer staples. In financials, you have something like JP Morgan, which is a huge name to potentially pay attention to. And then getting down here, a bunch of healthcare. And look how much of this group is healthcare. Only one technology name and not one that you've probably ever looked at, Norton LifeLock, right, and NLOK. Let's look at some of these stocks in particular and see why they bounced up to this new highs list. So consumer staples, we have Campbell Soup, CPB. This is a stock that has pulled back to the 50-day, and so many disciplines, are leaning on long-term uptrends, short-term weakness, and you see how that played out really nicely with Campbell Soup a number of times. It broke below it back in May, but since then you can see a number of times where it pulls back to the 50-day, ends up being a great time to accumulate before the next leg higher. Now we have a new price high, a new closing high for the year, really all time. Looking back at this chart, relative strength teasing a 1-month high. If we would see it break to new relative highs from the high in October, I think that could be a really compelling chart. Not there yet though. Let's go back to the list here. Kellogg is another one, ticker symbol K. And again, you can see this great consolidation and then accumulation, breaking above the previous swing high. This nice little 3-month base continuing to push higher and higher. So it's always interesting to see when the market is doing one thing and then certain stocks are doing something very differently. Kellogg is one that fits in that gear, and I like differentiated price patterns that are doing well, right? So this is a stock that's actually improving in relative strength, making new highs above 2 upward sloping moving averages. Again, if I had a portfolio that looked kind of like that, I probably feel pretty decent. Let's look at JP Morgan. So this is one that sold off yesterday. This is called, does anyone know? Quick trivia question, Candlestick Aficionados, what this is called. I feel like every time I ask that question, it's the same one, so sorry about that. This is a Dragonfly Doji, and don't ever care about the name, care about the pattern. So, open and close at the same level. We traded down, but closed back to the highs. That tends to be sort of a little short-term slingshot going higher. Now, once again, we're testing all-time highs. If JP Morgan looks like that, I don't know how negative you could be about stocks overall because it's making new highs, but most noteworthy on the new highs, let's look at all the healthcare names. Take some time, and it's not just certain ones. There's pharma in here. There's a bunch of different groups that are represented, biotechs as well. Next, I want to look at, very quickly, the new lows screen. So the same thing. And now we're going to look at the new lows. Not too many here, right? So we're going to sort it on here. So again, signal number one, how many stocks on the new highs list versus the new lows list? We have 6 stocks in the S&P on a new high, a new 13-week high today. We had about 25 or so, I'm guessing, just visually from the last one. So definitely more positive than negative, and sort of a mix, right? A couple technology names, and I would say 2 that are interesting are in telecom equipment, right? So Cisco making a new low. One of my mentors always mentioned, never confuse the bottom of the page with support. And when a stock like Cisco is in a downtrend, that on its own is no reason to want to buy it. Lower lows, RSI going lower, relative strength going lower. Boy, I think you feel like you need to avoid something like that overall. That's our shifting stock segment for today. Again, today we wanted to lean a little bit more on the scanning engine, think about some of those signals we can tease out. We want to wrap up today's show by sharing the 3 in 3 charts in 3 minutes. If you've not looked at these before this moment, I hope they're on your radar starting today. First, we're going to look at frontier markets. We didn't talk a lot about asset allocation in the form of global equities. We just talked about U.S. stocks and the S&P 500, but I would always encourage you, have a good chart list with global ETFs. And on my list, I have the first 4 are the spiders, EFA, which is global developed, EM, which is emerging markets, and then FM, which is frontier markets. This is a lot less regularly followed by a lot of people. I like charts that are going up, and the fact that this is going up in such a big way relative to every other chart I've seen tells me to be interested in a little bit. Now, you have to be wary with some ETFs. With the FM, if you look at the composition, you have a huge weight on Kuwait. It's like Kuwaiti financials. It's Argentina. It's a lot of country, Vietnam, a lot of Southeast Asia in there. It's sort of a mix because not all frontier markets are liquid enough to have enough exposure to be in the FM. So the return profile is very different, very unique. But again, charts that are going up when other charts are not, I'm interested in. So if you've not looked at frontier markets, maybe worth taking a look and seeing if it's something that could fit into your thinking, or at least your routine, to be aware of it. Chart number 2, the TLT. This is the long bond ETF. There are a lot of ways to think about bond markets versus stocks and how they relate. But for me, the TLT is a great read on bond prices. So in general, moves inverse from the 10-year yield because it's sort of making the opposite bet on bond prices versus yields. Essentially, what I've noticed with this chart, and the reason why it's on the 3 in 3 is I put this pattern on here back in October when I saw lower highs. I detected a bit of a higher low. This pattern pretty much broke that out completely. I would argue now it looks more like what I'd call a bull flag, which is a nice run, and then a parallel set of highs and lows. And I'll probably tweak this line and put it down here a little bit. What's interesting is we've been in a downtrend now, lower highs, lower lows. We have not broken above trend line resistance. So until we break above that trend line using the highs from August through October, until we break above resistance just above 141 to 142, it's telling you bonds are not quite in an uptrend yet. But the chart we looked at, the third one, we looked at a little earlier at the beginning of the show, looking at stocks versus bonds. And what's interesting here is even though the TLT isn't dramatically breaking out, overall it's starting to do better than stocks. And so as this ratio turns lower, that means it's favoring risk off versus risk on. It's favoring more of a rotation to bonds versus stocks, which would be a very different environment and unusual for year end. So it's an important chart, hopefully, to pay attention to. Folks, thanks so much for joining us today on The Final Bar. Please keep your questions and your feedback coming. The Final Bar at StockCharts.com. You can look us up on Twitter at Final Bar SCTV. Won't you check out our YouTube channel for StockCharts.com? You'll see all of our videos going back. For StockCharts in Redmond, Washington, I'm Dave Keller. Have a great night.